The question today is, are we headed towards another Great Depression? And you kind of wonder if we're actually are in similar conditions that existed at the end of the 1929 October when it had the big major crash. We had a crash this year that's actually bigger than the first year of the Great Depression. It's actually similar in scope to actually the second year of the Great Depression, and I don't think there has been a time period where the Federal Reserve has been this aggressive at going from near zero and just continue to accelerate on the gas pedal for interest rates, especially during a time when we're probably in a recession already. Usually once we're in a recession, the Federal Reserve doesn't want to continue to raise rates because it's weakening the economy, but they have kept low rates since around 2009, and then they lowered it again during the pandemic and really wanted to allow people to continue to do fairly well financially during that time period. But now we're having super inflation and everything seems to be crashing. And what's funny is anytime things stabilize, I hear people say that's the bottom. Like even Bitcoin, it was staying at near 30,000 for a long period of time. Now it's in the $20,000 range. People are saying, all right, that looks stable now. Just because it went down to 17 and it went back to 20, that doesn't mean that it's stabilized. It just means that it's where it is at the moment. But that could be the next trap door before it goes to 10 and then maybe to 5. But it looks like there really isn't any safe investment out there. Everything is continuing to crash. There's no real indication of any uptrend whatsoever. But yet you'll hear people basically talk about how they're dollar cost averaging and they're doubling down on some of these growth stocks because they appear cheap. But if we are in a second wave of the Great Depression, like similar to the 30s, if you think about it, would it have made sense to jump in just like a year in to this major downtrend? That wouldn't really make sense to me. It seems like this actually would continue for a much longer time period actually. So it seems like people are very, very premature in terms of jumping into the market, because the truth is some of these evaluations for a lot of these companies is still extremely high. Like Amazon, for example, I believe the PE is somewhere around the 40s or 50s. What does Annie think about this?
Definitely think that you should wait for a real uptrend to start. Nobody knows when it will start, but in the past, it usually coincides when the Fed starts to lower interest rates again and launches QE. But there's no sign of that happening anytime soon, so probably have a long way to go.
So there are other things that are similar to the Great Depression that existed in the 30s. You have basically China's a rising power in the sense that they're trying to cause a ruckus around the world. They want to give the impression that they're going to invade Taiwan anytime. Then you have Russia attacking Ukraine. That's similar to some degree, like what you saw with Germany, Italy, and also Japan. At that time period, you have these bad actors who, the Axis powers, that are trying to basically show that they're the new dominant force. Of course, it took a long war to actually end that, but this could actually be related to Ray Dalio, what he talked about as a great debt cycle. Because if you think about it, the great debt cycle kind of began in 1945. That seems to be when basically we got this new super cycle where markets started to go up after the Great Depression. But these cycles, they only last for about 40 to 80 years. If you think about it, we have more debt now than we ever have had in history. So that accelerated because the interest rates were so low for so long. So many people kept borrowing more and more money. And of course that was unwise, and the government did it too. And now we're stuck. And now as they raise rates, you start seeing that things start to collapse. For instance, crypto collapses. People were borrowing money to buy crypto, and it's not going to be very pretty. You see a lot of corporations that were heavily indebted, like Revlon, they're basically not going to exist anymore. And I think that a lot of people are not quite prepared for this. They're kind of thinking like the stock market that existed in the recent past, where buy the dip and a year from now you're going to do fairly well. Well, I'm not 100% sure that that's the case. I've never seen actually a market quite like 2022, where it's just you get like an up 1 or 2 days and then boom, next few days goes down more. It's a pretty rapid move downward, and nobody wants any kind of risky assets like crypto, NFTs, all that kind of garbage. Right now, people can't believe it that cash is the only thing that makes sense. I'm the only YouTuber who tells you stay in cash, don't add money to any kind of investments right now, because the truth is things are going down, which actually means that your dollar is going up. If the stock market continues to go up, it doesn't matter if inflation is high. The thing that you want to buy, supposedly, stocks are actually going down in price, so you're not actually being impacted by the inflation of these kinds of assets. So that's something to keep in mind. You don't have to actually invest in recession, contrary to what a lot of the other people say. Like, for instance, Graham Stefan, he's been in crypto since I think 2019 or 2020, and the truth is I don't think he's ever sold any of his crypto, and he's down like 30 or 40%, he admitted. So that doesn't make sense as a strategy. I did the opposite of what Graham Stefan. I kind of have the more of the Great Depression kind of mindset how to invest. I bought into crypto around 11,000 for Bitcoin, sold it at 40,300, and that's a more successful strategy. Because look at it, it's at 20,000. I have no intention of buying it yet until the uptrend begins. And when will that begin? It will begin when the Federal Reserve is basically saying they're going to start lowering rates, and I don't think that's happening anytime soon. I think that they really are serious this time, that they want to continue raising rates, especially because they sold all their stocks, so they don't really seem to have skin in the game anymore. Anyway, this video is very important. You need to get the word out. Click like, share it on Facebook, Twitter, everything you use, and subscribe, and I'll see you in the next video.